Good afternoon, ladies and gentlemen. Welcome back to Young Money Investing. It is Sunday afternoon, so it's time for my weekly market prep where I go over the major U.S. stock markets and indexes to give you a better understanding of price action and market trends so that you can make better trading decisions and ultimately make more money. If you enjoy this content, please go down, smash that like button, show me a little bit of love. I'm trying to grow this channel. We are over 100 subs, so next up on the list is 200. Let's go ahead, smash that, drop a like down below, click that subscribe button, sit back, relax, take some notes if you like to, and let's go ahead and jump into the charts. Alright, we'll start off on a daily time frame looking at the DXY. You can see that we did kind of push up into this red resistance area, get rejected back off. Haven't quite retested the support line at 101.62, but kind of got pretty close to it. The low on this candle here was 101.92, so only 0.3 points away from it. Still trading below our 20-day moving average and our 200-day moving average. Not really sure what's happening with the 50 right now as we zoom in a little bit. Kind of rejected it a little bit here Tuesday, Wednesday, broke through it, and now we might get a push back below it. We might kind of find some support and push back up into this red resistance area. Not quite sure what's going to happen yet, but definitely keep an eye on this 50-day moving average to kind of give you a little bit of a clue as to which way the dollar is ultimately going to start moving. Taking a look at the Nasdaq here, you can see that we kind of cooled off a little bit. Going back to about May 25th, has pretty much just been in a straight uptrend. During that time, we gained about 10% until we peaked about June 16th. So a good 3 weeks there. Price action was just trending pretty much straight up, gained 10% in about 3 weeks. So very, very strong trend. The Nasdaq is up year to date about 35%, so it's had a really solid year to date. Really has not given anything back at all, as you can see as we zoom out here. I'll even zoom out to a weekly time frame. Just up. Really no pullbacks, no consolidation, nothing at all since pretty much the beginning of this year. This very first week, Tuesday, January the 3rd, was green, and then that was pretty much the beginning of our ascent. I do think the Nasdaq does need to retrace or consolidate or kind of cool off a little bit at some point. I don't know when that's going to happen, but as we take a look here, price action is currently trading 21% above the 200-day moving average. That is very, very extended from the 200-day moving average. And it's also 8.5% above the 50-day moving average. So very extended here. I do think there has to be some type of retracement, some type of, cooling off period. We might come back down to this 13,843 level, which has been resistance here, kind of wicked around here and here. So kind of an interesting level. We last ran into this level kind of late May the 19th, 22nd, 23rd, 24th. Ran into a little bit of trouble and then just broke through it, never retested it, never really did anything. So I think that that's a good place to maybe kind of target price action in the short-term future. That would represent a decline of about 8%. Jumping over to the Russell once again went right up into this 1923 level and came right back down. Really ugly week here. I'm going to zoom out to a weekly time frame. Pretty much a Barabozu candle, lost 3% after we ran into that 1923 level. Very, very stiff, strong resistance at 1923. The only thing that I do like is we are coming back to the top of this consolidation channel. I'd like to see price action hold That's at about 1825, and that's also in confluence with the 200-day moving average and potentially even the 50-day moving average as well. So I would really like to see the Russell hold this area right here, that 1825 level. At that point, if it holds, it starts pushing back up towards 1923. I do think that we could potentially see a breakout of this 1923 level. If that happens, I'm going to be super excited. I think you could, see a move back up to possibly 2000, possibly even 2100. But the first thing we have to do is, as I mentioned, hold this 1823 level. If price action was to break this level and just continue moving lower, I would expect it to fall back into this consolidation zone and catch support around 1734. Let's jump over to the Dow Jones. Dow Jones looking a little bit similar to the Russell. We came up to that 34,345 level and got slapped right back down. This has also been a very stiff resistance point for the Dow Jones going back to, let's see here, November of 2022, and even a little bit before that, August of 2022. Really just have not been able to break above it, really largely just trapped in this kind of consolidation range. So it looks pretty similar to what's happening on the Russell. As I zoom out to a weekly time frame here, you can see really just sideways action. That's all that's really happening on the Dow Jones right now, since we had that amazing rip going back from October of 2022. But not really too much to report other than that. Is price action gonna sink back down to that 32,580 level where we have a support line kicking in? You could catch a nice little draft on this 200-day moving average. That is perfectly reasonable as well. 20-day moving average and the 50-day moving average are just kind of overlapping each other right now. You kind of get that a lot when price action is just moving sideways. It's hard to really utilize moving averages effectively unless price action is trending quite strongly in either a bearish or a bullish direction. Now, we have done our indexes. We've got them all out of the way. You know what to expect from the major indexes this week, but I'd like to go over my trade of the week. We are looking at JetBlue Airways this week. So the ticker symbol is JBLU. I'm going to draw a couple lines. I'll be right back. Okay, so I've drawn out a couple things here. We have this red resistance area here, which I'm going to make just a little bit darker so you guys can see it. Yeah, so we have this red resistance area. We have this gray consolidation area that price action just broke out of. And I'm going to turn my moving averages off because they're not really relevant right now. I like a clean chart. So you can see we were trapped in this consolidation area going all the way back to March 13th of this year. Pretty much sideways action the entire time. Sideways. Got a very nice breakout June 6th. Really strong, solid Mariposa candle, pushed all the way back up into this red resistance area and peaked out at $8.21. Now, when I see channel breakouts, one of the things that I look for in a channel breakout trade is a break and a retest. We don't have a retest currently, but we do have this kind of nice rounded top shape forming, a couple of doji candles, and then some really crazy volume on Friday. I don't exactly know what happened. I might have to look into that, but that's about five times what volume normally is, even though it only turned into a doji candle. So I'm not entirely sure why that is. I will have to look into it. I didn't see any news. I just did a real quick technical search on this. So something to keep an eye out on, but we have this nice rounded top. We have this resistance area. So what I like to look for is a retracement down to this level right here, about $7.25, somewhere in that vicinity. You will also notice I've drawn out a Fibonacci here. If we go from the top to the bottom, a retracement down to a 618 retracement would land you right at the top of that consolidation channel, which would be in confluence with a retest. So I think that that's a really solid level to get in. As far as take profits, I really like riding this up to the -2.5 extension level, which will put you at $8.58. And so as we open up a position here and say we get in at $7.25, take this up to $8.58, and I don't really want this to fall back in, so we'll put that right below the breakout of our Marubozu candle, and let's see, the low here is $6.87. We'll put this at about $6.82. You can play around with that a little bit if you want, but that should give you a risk to reward ratio of 3.09. So just a little bit over 3-to-1 reward to risk. Pretty solid. Have a little bit of patience with this trade. Let it fall back down to that 725 level and set your limit orders accordingly. Always remember, nothing I say in these videos should be misconstrued as financial advice. This is just me giving you my take on the markets and what I happen to see. If you should choose to act on it, you are acting of your own accord. I'm not telling you to buy or sell anything. And don't do anything stupid with your money. Always use a stop loss. And please, please, please don't risk anything you can't afford to lose. Thank you guys so much for watching. I appreciate each and every single one of you. Please go down and smash that like button. Show me a little bit of love, a little bit of appreciation, because my growth curve has kind of stagnated recently. So, you know, show me you guys still care. Smash that subscribe button, and I will see you all next time. Peace out, homies.